Hi, Chris Duff over at Serious Land Capital, vacant land funding partner. So today I wanted to touch base on what's typically the most common question that folks ask us, or at least top three, maybe top five question, worst case, depending on the week that we're looking at. But it all comes back to market selection. A lot of the phrasing of this type of question, hey, what markets are you seeing? Kind of the most activity, what seemed to be hotter, cooler, etc. Some type of variation like that. Everybody's always trying to get an edge on the market, and um, that initial top of funnel question is most critical for any land investor, because if you don't take a step forward to answer that question, it's impossible to get started in this business right off the jump. So no surprise, that's where a lot of people get held up, or start second guessing themselves, or just give up entirely. It's an age old question that's always going to have evolving answers. A lot of folks will come to us just because we see so much volume, and we operate nationally, so uh, the data that we have in terms of where uh, activity is focused within across the land industry is arguably better than anyone's, or certainly close to it. I don't know any other direct land flipping operator who's just kind of uh, direct marketing all across the country. It's a hard thing to dial in. I think we'll see it more over the coming years as techniques become even more dialed in, and you might have some institutional finance backing some of these shops to do a higher volume approach. But I don't think that is typical yet, outside of maybe a couple of cases here. So the way that I'll generally answer that is it comes down to the underlying asset more than anything. So actually, I'm going to take a step back. So I know I've used this paradigm multiple times in the past. Just bears worth rehashing, diving in a little bit deeper. Most of the typical flipping states haven't really changed in years, even decades. So usually what I'll tell people, hey, just look at the lower 48 states, draw a U starting at Washington State and ending at roughly Virginia on the East Coast. Those are going to be, on average, the most active land flipping states, where we'll see most deals. Obviously, you have some hotter states in the interior. Take your Colorados, Arkansas, Tennessee, Missouri, occasionally to kind of note there. But the vast majority will fit within that roughly U-shaped paradigm. But of course, there are even other exceptions. I'll know a whole bunch of folks, and us included, that have done stuff in Wisconsin or Michigan, Minnesota, around those upper Midwest regions, very, very occasionally, kind of the Great Plains states, but much less frequently. And sometimes in the Northeast. We've done a number of deals in the farther Northeast as well, but they're just not going to be quite as common. So, you might be listening like, well, you kind of mentioned most of the US, and that's what I kind of come back to, is like there's, yes, a general paradigm that you can follow that really shouldn't be surprising to anybody. But, the larger point here is that the underlying asset is, again, going to drive the opportunity. Some of our best returns have come in areas that are less typical, but the underlying asset was such kind of a screamer of an opportunity that we were willing to move in an area that we were less familiar with. And, maybe the market itself was not as active in terms of a volume perspective compared to other areas. So, that's what I tried to build into the land pricer model too, is like, focus on the characteristics of the property versus the comps as really the primary focus. That helps nail down the price. And then we also take into account the overall activity of the underlying market, from a sold to active ratio, across your sold or under contract and active comps within the area. And really the only time that we won't price out a land parcel is if there's truly, no other parcels within, I don't know, say like a 20 to 25 mile radius. Kind of depends on the area that you're looking at, that have, sold or maybe gone under contract in, absolute worst case within like the last 2 years, biased to be more recent whenever possible. And, some areas won't even have active comps. So, it's very, very rare that we'll come across geographies where that's the case. But it does happen occasionally. So in certain situations like that, yeah, I'm going to be basically saying, that this is just too risky to even pursue overall. But you notice that I included, fairly broad range as far as possibilities. Yes, it is possible to go after properties that might have far less comps available, so long as you can back it up with more superior characteristics. Like the riskier the underlying market, the better my characteristics have to be for the subject property to consider purchasing it, along with purchase price. Yeah, if you get like what seems to be a screamer of a deal, even based off limited comps, along with positive characteristics, that makes it more likely we'll take a swing at it. Whereas if I have a pretty starkly inferior subject property, especially in relation to all other comps on market, in a fairly inactive market or one where inventory outweighs sales significantly, and I have that all built within Land Pricer as far as how we actually weight the different ratios and sold active, then I'm far less likely to pursue that particular property. So again, gives us some wiggle room depending on always that underlying asset and price driving the primary decision making on the property. Other more general characteristics, again, mentioning that U shape, like most of those states are going to be fairly temperate or will have less seasonality. Every area is always going to have some seasonality, but some areas less than others. The main seasonality I tend to be most cautious with is the northern states, upper Midwest, Northeast, where during winter times you could have larger snowstorms, or it's just freezing cold. You're going to get less chance of site visits or snow kind of covering the ground. It doesn't kind of bring out the positive features of the property, or the foliage isn't in full bloom and so forth. And so it's a bit harder for any end buyer prospects to appreciate the property as much. So situations like that I'll be a bit more cautious with, especially as you head into late Q3 into Q4 of various years, just because, by the time you close and then you anticipate selling the property, it's usually going to be kind of peak season of lack of sales activity. So I know that was kind of a double negative there, but basically be cautious of buying right as you're heading into the coldest part of the year with kind of the highest weather variance. So that's a general paradigm. It won't necessarily preclude us from purchasing a property. It's just I'll usually want an even better price when possible, if we know we might have to undercut even further to generate enough activity to make it worth our while purchasing in one of those more seasonally oriented geographies across the US. Beyond that, the only other thing, and this is a little outside of our purview, but because we again don't directly market out for properties here, but I know some people throw a distinction in, can you acquire more deals or have a better hit rate going after more rural properties versus infill lots. Again, I've commented on infill versus rural in the past before. Sometimes there's a bit of a gray area. It's not a clean divide necessarily. I'd say on average, it probably is a bit easier to market out to infill, rural, just because you're potentially going to have much higher prices, besides like very premium infill lots. So less folks might be marketing out to that. It could be a little bit more of a blue ocean, especially if you're using a blind offer strategy. Rural lots oftentimes can be a bit more difficult to price. You might have an advantage if you do that type of outreach. So just something to consider there, but I wouldn't necessarily have enough data to indicate, one versus the other. We'll still, on average, we'll see more rural lots, but, we'll see plenty of infill as well to consider. So that's just something to keep in mind as well. I have a few other comments actually related to market selection. Maybe I'll touch on them just in relation to the overall macro economy, because some of the geographies are going to have variation there. So I'll probably comment on that another time. But I think this is a good stopping point for today. So if you're looking for funding, seriousland.capital, zero cost review of your land deals at Land Due Diligence Facebook group. Just about to record one later today, and landpricer.ai, expecting beta invites to go out by later today. Very excited about that. With that, subscribe and share. Take care. Thank you so much. Bye.